The housing slowdown will last a bit longer, but won't significantly impact the rest of the economy. That's what Fed Chairman Ben Bernanke signaled on Capitol Hill today. The Fed and other regulators are actively looking at tightening mortgage lending rules to prevent the kinds of abuses that we've seen in the past few years. Now, our next guest agrees changes are necessary, but he cautions against overdoing it, and he says mortgage resets should be welcomed, not feared. Joining us now is John Sauro, president of North Atlantic Mortgage Group. John, welcome back.
Thank you, Kathleen. Good to be back.
Now, I assume in your line of business, you have to listen to Ben Bernanke's testimony as closely as we do. So when it comes particularly to this question of the subprime mortgage market, the abuses that occurred, and the push for the Fed to do something, what is your reaction to what you heard the last couple of days?
My reaction to that is that, there are problems in the subprime market that need to be addressed. I think Chairman Bernanke has been doing a good job with answering the questions from the Senate Banking Committee. I think the Senate Banking Committee is overreacting somewhat. I think they need to give the industry a chance to cleanse itself, and it will cleanse itself. But I think Bernanke is taking the proper steps to make sure that there's proper disclosure and to make sure that underwriting standards are strong enough to be sure that we don't have this problem in the future.
Now, he particularly said that there will be more scrutiny of mortgage brokers. And I don't know if everyone in our audience realizes that there are states when you don't even hardly need to take a test, let alone get a license to be a mortgage broker. Do you support that? And in particular, what kinds of changes should be made? I know you fill the dual role of lender and broker like larger firms as yours do, but we know there's a lot of people out there, they've hung up shingles. A lot of them are good, motivated people, they want to help, but some of them are shysters.
Sure. Well, you have that in just about any business, don't you? And I agree with the fact of what Chairman Bernanke is saying, that he had mentioned something about possibly federal licensing. Look, you take a state like Florida. Florida's a pretty good state for consumer protection when it comes to mortgages. They have a licensing test. You can't get a license there without going through a test, and it's not an easy test. A very small percentage of people that take that test passed. So I encourage it. I think it's a good idea. Federal licensing, I welcome it because now you have one standard across the country that brokers need to follow, as opposed to the different standards from all of the different banking departments for each state. It would make it a lot easier for the brokers. Testing is welcomed, and I think they should be scrutinized. I think, there's no reason why they shouldn't. You have to be licensed to do to sell stocks. Why shouldn't you be licensed to do mortgages?
John, a lot of what the Fed has to do, does in this regard is guidance. They oversee, they examine, but there aren't necessarily tough laws that they pass that would include penalties. At what point are laws needed, and at what point could laws sort of kill the the mortgage goose that helped lay this record home ownership egg?
Well, maybe the Fed doesn't have any penalties out there, but the states themselves do have penalties. So if you're licensed in the state of New York or Connecticut, and there's wrongdoing, or you're just not, acting properly, or you're being very predatory about your business, there are, penalties for not following the rules, so to speak. If the Fed comes out with them, that's fine. I think, again, the industry is going to cleanse itself and already has started to do so. And I think it's important to note that you don't want to go overboard with this stuff either. Over-disclosure, over-regulation, legislation could really be harmful to the industry.
Now, John, many people we've had on this show have talked a lot about how the mortgage resets. People with adjustable rate mortgages, another big batch in 2008 will see their mortgage rate move up as the short-term rates have moved up. What should they be thinking? What should they be doing? And is it the kind of thing you think that could really whack the housing market again, or the economy more broadly? Well,
look, what's hurting the housing market right now is the fact that the Fed had 17 rate hikes, and there's been, no breather here. I mean, they've taken a pause, but they're not dropping rates anytime soon, from what we've gathered from Mr. Bernanke's testimony. If they were to reduce the rate, it would certainly curb delinquencies. It would certainly help people who need to refinance any of those mortgages that are currently resetting. What I would do is this: if you have a mortgage that is going to reset in the next coming months, 6 months, or even in a year from now. The smart thing to do is to be proactive. Contact your bank, contact your broker or banker, get a checkup. See if there's anything that you should do right now. You know, people are concerned about, gee, will I qualify for another mortgage at this point because rates are slightly higher? Look, rates are still historically low. You're not going to know unless you get checked up.
Okay, so that's nice. We go to the doctor for a checkup. You go to your mortgage lender or broker for a mortgage checkup. Sounds good, John. Thanks so much.